Founded in 2004 and headquartered in Vancouver, Canada, Endeavour Silver has cultivated a reputation for identifying distressed or undermanaged assets in Tier 1 mining jurisdictions and applying modern technical expertise to revitalize production and extend mine lives. This analysis provides a deep-seated evaluation of the company's current standing, its recent entry into commercial production at the flagship Terranera project, the strategic acquisition of international assets in Peru, and the broader macroeconomic forces that position the company as a primary vehicle for silver price beta in the late 2025 market environment. The strategic framework and corporate philosophy. The foundational business strategy of Endeavour Silver is predicated on balancing immediate profitability from its producing assets with long-term investments in exploration and project development. This philosophy is encapsulated in the company's 30 by 30 strategy, an ambitious roadmap designed to elevate the company to a senior silver producer status with an annualized production profile of 30 million silver equivalent ounces by the year 2030. This objective is being pursued through a rigorous multi-stage pipeline that includes the optimization of existing Mexican operations, the rapid commissioning of new high-margin mines, and the expansion of the corporate footprint into new geographic territories to mitigate jurisdictional concentration.
The company's investment thesis is centered on its status as a premium silver vehicle. In a market where many primary silver producers have shifted their focus toward gold or diversified into base metals, Endeavour Silver has intentionally maintained a high proportion of silver to gold revenue, often exceeding 50%. This concentration ensures that the company's equity performance is highly sensitive to fluctuations in the silver price, a characteristic that is highly valued by institutional and retail investors seeking direct exposure to the white metal during precious metals bull cycles. Executive leadership and operational stewardship. The successful execution of Endeavour's strategy is overseen by a management team with extensive experience in the complexities of the Mexican mining environment and international capital markets. Chief Executive Officer Dan Dixon, who assumed the role in May 2021, transitioned from his previous post as Chief Financial Officer, bringing a deep understanding of the company's fiscal structure and strategic growth initiatives. Under his tenure, the company successfully navigated the multi-year construction and commissioning of the Terronera project, a milestone that represents the largest capital expenditure in the company's history.
Operational oversight is managed by Chief Operating Officer Don Gray, a mining engineer with over 40 years of experience in mine engineering and operational management. Gray's expertise was critical in managing the technical challenges of the Terranera build-out, particularly in the face of inflationary pressures and supply chain disruptions that characterized the post-2022 period. The recent appointment of Elizabeth Senez as Chief Financial Officer in January 2024 further bolsters the executive suite with 2 decades of experience in accounting and corporate finance, ensuring that the company maintains fiscal discipline as it ramps up its production profile. Primary asset analysis: the Mexican operations. Endeavour Silver's operational foundation is built upon high-grade underground silver-gold mines in Mexico. Despite recent geographical expansion, the company's Mexican assets remain the primary drivers of its current production and cash flow. Guanaceví, high-grade resilience. The Guanaceví mine, located in Durango State, is the company's premier operation and its highest-grade asset. For nearly 2 decades, Guanaceví has been a reliable producer, although it has faced notable technical hurdles in the 2024-2025 period. In August 2024, the operation suffered a major trunnion failure on its primary ball mill, which necessitated a 15-week period of reduced capacity while a replacement was fabricated and installed. Fabrication was completed on November 30, 2024, and the mine returned to full capacity in December.
Despite this setback, Guanaceví maintains a robust production profile. In the third quarter of 2025, the mine processed 99,340 tons of material, producing over 1 million ounces of silver and over 3,000 ounces of gold. The mine benefits from the Porvenir Cuatro extension on the El Corso concessions, which are leased from a third party. While this arrangement requires significant royalty payments, it has been instrumental in extending the mine life and providing access to high-grade ore zones. To supplement its own mining activities, Guanaceví utilizes local third-party feed, which accounted for 21% of its throughput in early 2025, providing a flexible source of additional ounces. Bolañitos, strategic divestment and asset rationalization. The Bolañitos mine in Guanajuato State has been a core asset for the company since 2007, producing millions of ounces of silver and gold. However, by 2025, the mine had reached a mature phase with declining production and higher relative costs. Recognizing the need to rationalize its portfolio and focus on higher margin assets, Endeavour Silver announced a definitive agreement in November 2025 to sell the Bolañitos mine to Guanajuato Silver Company Limited.
The transaction is valued at up to $50 million, comprising $40 million in upfront cash and shares and $10 million in contingent payments based on future production milestones. This divestment is a strategic victory for Endeavour, as it allows the company to strengthen its balance sheet and reallocate capital and technical resources to its world-class projects like Terronera and Pitarrilla. For the buyer, Bolañitos offers operational synergies with their existing Guanajuato properties, creating a mutually beneficial outcome. The Terranara Project, Transformational Growth. The development of the Terranera project in Jalisco State is the single most important event in Endeavour Silver's corporate history. As of October 1, 2025, Terranera has officially entered commercial production, marking the culmination of a multi-year effort to build a modern, high-grade underground mine from the ground up. Operational scale and production targets. Terranera is designed as a 2,000-ton-per-day operation, utilizing long-hole and cut-and-fill mining methods to extract high-grade silver-gold ore from the Terronera and La Luz vein systems. During its commissioning phase in mid-2025, the plant consistently demonstrated its ability to operate at or above 90% of its design capacity, with metal recoveries also exceeding 90%.
The project is expected to produce an average of 4 million ounces of silver and 38,000 ounces of gold annually over an initial 10-year mine life. The high gold content of the Terranera ore provides significant byproduct credits, which are projected to make this one of the lowest-cost silver mines in the global industry. In its initial feasibility studies, the mine was projected to generate massive free cash flow, and while capital costs were revised upward during construction, the current high silver price environment has likely improved the project's net present value, NPV, significantly. Capital expenditure and execution. The road to commercial production was challenged by the inflationary environment of 2023 and 2024. The initial capital cost for Terranera was revised from approximately $230 million to $332 million. This increase was driven by a stronger Mexican peso, rising costs for steel and electrical equipment, and management's decision to optimize certain aspects of the mine design, such as waste rock and water management facilities. Despite these headwinds, the project was delivered near its scheduled early 2025 commissioning date, which management views as a testament to the proficiency of their development team.
International expansion, the Peru strategy. In a strategic move to diversify its jurisdictional exposure and accelerate production growth, Endeavour Silver completed the acquisition of Minera Kolpa in Peru on May 1, 2025. This acquisition represents the company's first producing asset outside of Mexico and provides a significant new source of silver-equivalent production. The Kolpa mine, technical and operational integration. The Kolpa mine, located in the Huancavelica department of Peru, is a silver, lead, zinc, copper mine that fits well within Endeavour's expertise in underground mining. Since the acquisition, Kolpa has performed in line with historical results, processing 118,896 tons of material in its first 2 months under Endeavour's management. In the third quarter of 2025, Kolpa produced roughly 1.3 million silver-equivalent ounces, putting it on track to contribute approximately 5 million silver-equivalent ounces to the company's annual profile. Endeavour intends to leverage its technical strengths to optimize the Kolpa operation. Plans are already underway to expand the plant capacity from its current 1,800 tons per day to 2,500 tons per day. Additionally, the company has committed to an aggressive exploration program to validate and expand the mine's resource base, which has a long history of being replaced due to depletion.
Jurisdictional diversification. The move into Peru is a tactical response to the evolving political climate in Mexico. While Peru has faced its own internal challenges, it remains one of the world's premier mining jurisdictions, with a clear path for large-scale development. By establishing a third leg of production in Peru, Endeavour Silver reduces its reliance on the Mexican regulatory environment and positions itself to attract a broader base of institutional investors who prioritize jurisdictional diversification. The future pipeline, Pitarrilla and Peru. While the current production ramp-up is the immediate focus, Endeavour Silver's long-term valuation is heavily influenced by its world-class development pipeline, most notably the Pitarrilla project. Pitarrilla, one of the world's largest undeveloped silver deposits. The Pitarrilla project in Durango State, acquired from SSR Mining in 2022, is a cornerstone of Endeavour's 30x30 growth strategy. Pitarrilla is a massive silver-lead-zinc deposit with a historical mineral resource estimate of nearly 500 million ounces of silver. In 2025, Endeavour invested over $25 million into an economic study and initial development work to determine the optimal path for the project.
Management is evaluating various scenarios for Pitarrilla, ranging from a large-scale 28,000-ton-per-day open-pit operation to a more focused, high-grade underground scenario. In the current high-price environment for silver, the economics of a large-scale project at Pitarrilla have become exceptionally compelling. If developed, Pitarrilla could move Endeavour Silver from a mid-tier producer to a senior producer, potentially doubling the company's consolidated output once again. Parral, regional exploration success. The Parral project in Chihuahua State represents another significant source of organic growth. Parral is a historic mining district where Endeavour has successfully identified substantial silver resources through the drill bit. The project offers considerable optionality, as it can be developed as a standalone operation or leveraged through regional synergies. The success at Parral underscores the company's commitment to exploration as its primary engine for value creation. Financial performance and capital structure. The financial health of Endeavour Silver in late 2025 reflects the high capital intensity of its expansion phase, balanced by the strong revenue generation afforded by record silver prices.
Revenue growth and earnings profile. The company's revenue has seen a dramatic escalation as new production has come online. For the full year 2024, revenue was $217.6 million, a 6% increase over 2023. However, by the second and third quarters of 2025, revenue growth accelerated to 46% and 109% year-over-year, respectively, driven by the addition of the Kolpa mine and the commissioning of Terronera. Despite record revenue of $111 million in Q3 2025, the company reported a net loss of $37.5 million for the period. This loss was primarily due to non-cash charges, most notably a $39 million loss on derivative contracts. These derivatives, gold forward sales, were a mandatory requirement of the Terranara debt facility. While they provided price certainty during the construction period, the massive surge in gold and silver prices in 2025 has turned these hedges into a significant accounting headwind. Endeavour Silver's cash flow profile is currently undergoing a structural shift, transitioning from a period of high capital intensity and negative free cash flow to a phase of significant liquidity generation as its major growth projects reach maturity.
Historical and recent cash flow performance. In 2024, the company generated operating cash flow before taxes of $72.3 million. However, the heavy capital requirements for the construction of the Terranera project meant that operating cash flow before working capital changes remained more modest at $27.2 million for the full year. The financial results through the first 3 quarters of 2025 reflect the integration of the Kolpa mine and the final stages of the Terranera build-out. By the third quarter of 2025, revenue surged 109% year-over-year to $111 million. During this period, mine operating cash flow before working capital changes reached $39.7 million, a 102% increase compared to the same quarter in 2024. Despite these operational gains, the company reported a net loss of $37.5 million in Q3 2025, largely due to $39 million in non-cash accounting losses related to gold derivative contracts required by its previous debt facility. As of September 30, 2025, the company maintained a cash position of $57 million.
Impact of Terranera and asset rationalization. The declaration of commercial production at Terranera on October 1, 2025, is the primary catalyst for the company's improved cash flow outlook. Management expects the project to generate upwards of $120 million in after-tax free cash flow during its first full year of production, assuming a silver price of approximately $31 per ounce.
This high-margin production is anticipated to drive the company into a position of positive free cash flow starting in the fourth quarter of 2025 and continuing through 2026. The strategic divestment of the Bolañitos mine further bolsters this transition. The definitive agreement to sell the asset to Guanajuato Silver for up to $50 million includes an upfront payment of $40 million, $30 million in cash, and $10 million in shares, expected to close in January 2026. This provides immediate liquidity and removes a mature, higher-cost asset from the portfolio, allowing capital to be reallocated toward the advancement of the Pitarrilla project.
Strategic financing and debt restructuring. In December 2025, Endeavour Silver executed a transformational financing event by launching and closing a $350 million offering of unsecured convertible senior notes due 2031. These notes carry a highly favorable cash interest rate of only 0.25% per annum. The initial conversion price was set at approximately $12.45 per share, a 32% premium over the then current market price. The proceeds from this offering were earmarked for several strategic purposes: the full repayment of the high-interest senior secured debt facility with ING and Société Générale, the advancement of the Pitarrilla project, and general corporate purposes. This move significantly de-risks the company's balance sheet, replacing restrictive bank debt with long-term, low-coupon capital, which will drastically improve free cash flow as the company enters its primary production phase in 2026.
Forward-looking analyst projections. Financial analysts anticipate a dramatic escalation in cash flow as Terranara and Kolpa reach full steady-state production. For the full year 2026, consensus estimates project cash flow from operations to reach $313 million, with free cash flow estimated at $231 million. Looking toward 2027, operating cash flow is expected to grow further to $332 million, though free cash flow is projected to dip slightly to $170 million as the company likely accelerates capital expenditures for the development of Pitarrilla. On a per-share basis, analysts forecast cash flow to rise from approximately $0.31 in 2025 to $1.07 in 2026 and $1.14 by 2027. These projections underscore the market's expectation that Endeavour Silver will evolve into one of the most cash-generative primary silver producers in the mid-tier sector. Comparative analysis and valuation. Peer comparison. When compared to its primary silver peers, such as First Majestic Silver, Core Mining, and Pan American Silver, Endeavour Silver consistently displays a higher price beta. As of late 2025, its 3-year beta against the GSCI Silver Index stands at 1.84, exceeding First Majestic's 1.69 and Pan American's 1.44.
On a valuation basis, the company trades at a price-to-sales ratio of approximately 8.5x. While this is higher than the broader mining industry average, it reflects the market's anticipation of the massive revenue surge that will occur in 2026 once Terronera is fully ramped up. Some analysts view the current share price as significantly below its fair value when accounting for the future cash flows of the expanded asset base. Endeavour Silver's valuation in late 2025 is defined by a significant premium over traditional cash flow-based fair value models, reflecting the market's high expectations for its transformational growth phase. At a current share price of approximately $10.08 on the NYSE, the stock trades well above some fundamental fair value estimates, which range from $1.84 based on conservative discounted cash flow models to $7.83 based on broader adjusted financial metrics. Despite this apparent overvaluation on a trailing basis, the market is pricing in exceptional forward-looking growth, with sales projected to increase by 103.76% and earnings per share, EPS, forecasted to grow by 111.7% annually. In terms of relative valuation, the company's price-to-sales, PS, ratio is approximately 8.5x. While this exceeds the U.S. metals and mining industry average of 2.3x, it remains favorable compared to high-growth peers such as Aya Gold and Silver and Go Gold Resources, who contribute to a peer average PS of roughly 10.7x. Furthermore, Endeavour's enterprise value to EBITDA, EV/EBITDA, multiple of 53.9x,
and price-to-book (PB) ratio of 5.19 reflect the capital-intensive nature of its recent project developments, which are only now transitioning into the production phase.
A central component of the company's valuation is its sector-leading silver beta. With a 3-year beta of 1.84 against the GSCI Silver Index, Endeavour offers the highest sensitivity to silver price movements among its primary peers, including First Majestic 1.69 and Pan American Silver 1.44. This leverage is highly prized by investors seeking pure-play exposure to a silver market currently experiencing its 5th consecutive year of structural deficits. Under high-price scenarios, such as silver reaching $100 per ounce, some valuation models suggest the company could generate upwards of $900 million in annual revenue, which would fundamentally reset its current multiples. Risk assessment. Investing in Endeavour Silver Corp involves a complex set of risks ranging from the inherent dangers of underground mining to the shifting legal and security landscapes of its primary operating jurisdictions. While the company offers high leverage to silver prices, investors must weigh this against several critical risk factors. Regulatory and jurisdictional risks in Mexico. The most prominent risk stems from the evolving regulatory environment in Mexico, where the majority of the company's assets are located. Significant amendments to the Mexican mining law passed in May 2023 introduced several restrictive measures, including reducing the term of mining concessions from 50 years to 30 years and requiring public consultations before new concessions are granted. Furthermore, mining companies are now legally required to pay at least 5% of their profits to local communities, and the federal government recently increased mining duties from 7.5% to 8.5% starting in 2025.
Added to these legislative changes is the uncertainty surrounding Mexico's judicial reform, which transitioned the judiciary from an appointed to an elected system, potentially impacting how mining disputes are adjudicated. There is also a proposed ban on open-pit mining that, while not currently affecting Endeavour's active underground mines, could significantly impact the large-scale development potential of the Pitarrilla project. Operational and technical challenges. Endeavour Silver faces significant operational risks as it transitions between different stages of mine life across its portfolio. The company has experienced declining production at its legacy mines, Guanaceví and Bolañitos, due to natural resource depletion and lower ore grades. Technical reliability has also been an issue. For example, the Guanaceví mine suffered a major trunnion failure on its primary ball mill in 2024, which reduced processing capacity for 15 weeks. The ramp-up of the flagship Terronera project also carries execution risk. Although it reached commercial production in late 2025, the project faced substantial cost overruns during construction, with the initial capital estimate rising from $230 million to $332 million due to inflationary pressures and currency fluctuations. Any further operational setbacks during the final stages of throughput optimization could delay the company's expected transition to positive free cash flow.
Financial volatility and derivative losses. As a primary silver producer, the company's revenue is highly sensitive to the spot prices of silver and gold. While this sensitivity provides upside in bull markets, it exposes the company to severe financial instability during price pullbacks. The company's recent financial results highlight the risk of mandatory hedging. In the third quarter of 2025, Endeavour reported a $37.5 million net loss despite record revenues, primarily due to a $39 million non-cash loss on gold derivative contracts required by its previous debt facility. Additionally, the company's financial health is subject to fluctuations in the Mexican peso, Canadian dollar, and US dollar exchange rates, which can unpredictably inflate operating costs. Financing and dilution risk. To fund its aggressive 30x30 growth strategy, the company has frequently relied on equity and debt markets. The December 2025 offering of $350 million in convertible senior notes, while providing low-interest capital, introduces the risk of significant future equity dilution for current shareholders if the notes are converted at the strike price of approximately $12.4550 per share. Historically, the company has also utilized at-the-market ATM offerings to bolster liquidity, which further pressures earnings per share and may hinder stock price performance if market demand for new shares is weak.
Conclusions and future outlook. Endeavour Silver Corp is entering 2026 in the strongest operational and financial position in its 20-year history. The transition of Terranara to commercial production is a game-changer, providing the company with a high-margin, long-life asset
that will serve as its new cornerstone of production. The acquisition of Minera Kolpa has successfully diversified the company's jurisdictional risk and added a significant new source of silver-equivalent ounces. The road ahead is focused on execution and optimization. Management's immediate priorities include ramping Terranera to its full 2,000-ton-per-day capacity, integrating the Kolpa mine more deeply into the corporate structure, and advancing the economic studies for the world-class Pitarrilla project. If the company can successfully navigate these milestones, it remains well on track to achieve its 30 by 30 goal. For investors, Endeavour Silver offers a compelling combination of deep value growth and aggressive leverage to a silver market that is facing unprecedented structural shortages. While the risks of operating in Latin America are ever present, the company's proven track record of project delivery and disciplined capital management make it an attractive option for exposure to the silver industry.